This very clear understanding of price action, right? Price goes up, it creates a level. Price goes down, it creates a level. This is the vertical axis that our chart lives on. The idea of something can move up or something can move down, right? This is the only reaction most people pay attention to. Well, there's another reaction that happens on the charts, which is the horizontal axis. This is the effect of time. Our charts move not in a bilinear direction as to where they focus on candles and they see up and down and they see, okay, there's I'm not sure what this is down here. I'm just going to delete that. They see the up and down of a chart, right? And they just simply see something like this here. And they simply say, okay, we have a level here, right? And we have a level here. Fine, right? These events, these levels are created by the vertical axis. They're created on the event of something that can go up or down. But people don't understand that our charts are also moving sideways. So the horizontal axis is actually a tool that is not used at all. But there's something very unique that's created on the horizontal axis, something that we all use on a regular basis. Anybody care to guess what it is? Trend lines. Trend lines are the subject of time. Trend lines are created by events over time. They are not created by events that go up and down. Those create levels. So these are created by the vertical axis. A trend line is created over time, which is the horizontal axis. This is why on charts, time is what creates trends, and time is also the only thing that can break them. So when you have a trend that is created from here to here, this is the effect of time. This is not the effect of price going up or down. Price going up or down has created the level. So when you think about that for a second, you have points. You have a base point and you have a reach point. Those are just the pinpoints of the effect of time. Those are not created by levels. Rather, they are pinned to levels as an effect of time. But only time can break what time creates. And that's why we get compression on charts. And we're going to go over this. And this is pretty eye-opening for most people. But we'll get into that a little later on this ARN chart here. But the horizontal axis is one that creates a certain type of level. And that level is trend. But what something creates is only what it can break, right? So you guys see this all the time where you have a level and only the idea of moving sideways through it, or the event of moving sideways through it, or floating through the level, or holding support. We use these terms: holding support, floating through a level. This is the effect of time. Holding support, if you held support in an infinite here, it wouldn't move. Holding support as time goes forward changes the way our charts are, right? Time is what creates trend, therefore time is what can break trend. Trends are like steel walls, and price action becomes like a pillow. Something like this, right? Where you have a trend and you try to break above it and you come back. It's like hitting a steel wall with a pillow. Not until you have the effect of time can you gain or lose that trend, right? And you look at something like ARN, and ARN is an example I love using because one, it's already done, so I don't have to do trends over again because trends get into a completely different topic. But it is a great visual example of what the effect of time is. And these trend lines that we have are, again, they are like steel walls, and attacking trend is almost like hitting a steel wall with a pillow. It doesn't really do anything. It just kind of always falls in this pattern. And you guys see this on trend all the time where you hit trend, you come back, you hit trend, you come back, you hit trend, you come back, you hit trend, you come back. That's just what we looked at actually with accumulation distribution cycles, is we looked at where trends get created and then points where they need to therefore break out of them later on, right? That's the same thing that's happening here. A trend is created from an event in the past, right? And you actually have to use the effect of time to break through trend before you can attack the upper trend. And you can attack the upper trend, but you can't gain the level. That's the difference, right? So in a situation where am I looking for here? In a situation where you would have a level like this level cannot be attacked until you are past trend. And you can see this original downtrend that gets created, it is compressed against the effect of time. Even in this moment here, it can't actually attack the downtrend. And if it can't attack the downtrend, what did we just talk about laddering? You've actually, invalidated the move up, which is therefore creating a ladder down, which is all that's doing is creating more distribution cycles because the effect of time hasn't been able to break the level, right? These also act as a steel wall, but they also act as a shield to upper levels, right? You can see how these trends act as compression. And until you have kind of gone through these trends over time, you can't actually take a move up. But this is the exact same thing we just talked about, right? This is the arc in the move, right? This is the distribution cycle, the 1, 2, 3, 4, 5 distribution cycle, as to where you have this side of it, and this arc that happens on the trade, right? Events that are created by time, therefore only time can break them. And they actually give you points of automated failure. Like this right here was a point of automated failure based on a trend from the past, because it was actually acting as a shield to this. People will short against trend. This is no news, but what is news is the idea that you can't actually start an uptrend until you back attack the valleys. In this moment here, where you back attack this valley, notice how this is the only point where an uptrend starts. If you have created this to this is that point where that uptrend starts and supports the move until it breaks down, right? This is that point where it supports the move as trend is created, because you can't trend up, which is laddering in another sense of the word, until you back attack a valley, because you can't stop a downtrend until you back attack the valley. So you can't stop a laddering down until that happens. Well, you can't start that process until the effect of time has allowed you to go through these trends. So the horizontal axis is one that is a completely misunderstood in our markets, and trend is a form of compression, and compression happens in shorts. The term compression, all that reflects is the shorts that are being taken in the market, the short against this trend level here, the short against this trend level here, the short against this trend level here, the short against this trend level here. These are just forms of compression that are invalidating the ability to actually get to this level. And you just simply go back to that same idea of, even if you were to purchase from here to here, that's 10, 11%. People aren't going to say, we have 11%, but you know what, let's wait till we get 14%. Because the scaling, and this goes into leveraging, which we'll talk in the future, but as a good cusp to leveraging, 11.9%, let's round them both up. So let's talk 12 and 15% here. 3, 6, 9, 12, that's 4 parts. 15 becomes a fifth part. You have 4-to-1 trade ratio in one sense to short that, or a 5-to-1 trade ratio in another sense to short that. So there's 3% to be gained on a trade that's less than 1-to-1 ratio on the difference of scalability from this point to this point. The ratio difference is actually a quarter of the gains. So you actually have 25% of the gains is what you're making by holding off of this level to this level. For this becomes a testament to leveraging, but also paints a very clear picture as to why people will short trend, right? But when you have 12% to be made here, or 3% more to be made here, that ratio of 4-to-1 there, of course, everybody's going to short trend. And that's why trend acts as a shield, because people short it against time. And until that trend is broken, that next level can't be attacked, right? And until this trend is broken, that current level can't be attacked. And until that trend is broken and you're out of the effect of time, but because that's the important part of time, is you release the binds of time, you release the constraints of trend. Trend will always compress moves on both sides too. Trend will also support moves too, as you can see. Trend will always support the moves going up, just like an uptrend becomes the spot where you can continuously get the cheapest price or the best discount or the biggest Black Friday sale, right? However you want to look at it, right? If the level is here, but you buy trend, like this is buying normal price, this is buying it on sale, right? But trend becomes that same thing. It's compression on the other side, right? Flip your chart either way you like, it doesn't matter. It's the same thing, right? Like this is still compression on this side. It's just you're looking at the bottom side of compression, right? But that horizontal axis, the movement of price through time, is something that people don't pay attention to, and is crucially important, because breakouts happen in moments like this, or moments like this. There is kind of a handshake that is made where compression is released. So a moment like this, for example, this was a trend from here to back in the past. This is a form of compression. So what happens is this. You have levels, right? And then you have trends like this that are created much further in the past. But anyways, you have levels and trends, and your charts often look like this. And compression happens all during the existence of this to here, and compression against this trend is happening at this level. So now you're compressing against the level, you're compressing against trend, fine, you hold, you compress against this level, you compress against this trend, and then you come up here, fine, you gain this stuff here, you go through this issue like this, you compress against here, you come back down, hold this, you come here. This is a moment where here and here become almost this handshake where you have released multiple binds against your move. You have released the effect and the compression of trend, and you have released the effect and compression of a level. So this acts as almost like a handshake moment. Get rid of all this junk and go back to ARN. This acts as a moment where compression gets released, and these moments where you can break trend and you're not compressed against level, that is when you can have these larger moves up. Because in this moment, and I'm going to update this chart here a little bit, actually. Get rid of this, get rid of this. That level is not important. Those trends are still important. We have our downtrend valley here. You notice how compression and trend can make this handshake agreement as to where one is not compressing the other in an event like this, where a trend is compressing that level and then a trend is still compressing the level. Well, first off, we have released the binds of trend due to the effect of time, right? Time has like I said at the start, it's like a steel wall and hitting it with a pillow, and you can only get past the steel wall as you walk through it. Once you have released the compression of time and you are at this breakout level, this is when breakouts happen, is when you have a downtrend valley that is completing an accumulation and distribution cycle, is passing through trend, and you can have these larger moves up, right? And then the same thing happens here against the compression here. You can have a larger move up, fueling bigger moves, because this handshake agreement has been made where trend and levels or trend and price can, well, trend is levels, trend and valleys there, we'll say it like that, where trend and valleys can work together in the same moment, as to where that was not possible here in the chart due to the effect of time, due to the horizontal axis, and also what we talked about before about these accumulation and distribution cycles. Like you can even draw it right now and see it right here. You have a break here, you have a break here, you have a break here, right? You have a break here. This is that same 1, 2, 3, 4, 5 cycle that we just looked at. This would be the ending of distribution here, which would swing up and try to attack this level, which it can't do against trend. So it fails down. Of course, it fails down. It can't technically break its ladder, but then it tries to micro trend against this or break this fractally, which it does, which then creates its own swing, which is this 4 or 5 out here, which then is breaking trend here, creating kind of that final moment that we also looked at, where you have a trend here where you go over top of it and bounce off of it. The difference now that you're looking at ARN is this has, you've now seen it with the effect of time, because time is a tool as well on our charts, and time is something that constantly compresses and range binds every part of every move that we will always see. Trend will always range bind you, and you can look at any chart, like let's pick the top, whatever the top coin is.
Hey everyone, how's it going? As you know, I'm now giving out some of this content for free that I was otherwise charging for the past little while. Yeah, drop a donation, subscribe to the channel, join Patreon. You'll get access to Discord. Great way. Lots of top level traders in there, people who are doing this for a career every single day. So go to Patreon, join a tier, get access to Discord. Go on Reddit, talk about future of trading, talk about the science of trading, talk about cotton candy, socials, everything you can. Let's help this thing grow. It's the way you guys can thank me for giving out this content for free that I was otherwise charging money for. So I'll leave a Bitcoin address on the screen. I'll leave the Patreon address on the screen. Just do something to help out. Okay, thanks guys. Take care.